We are delighted to have Jess Houlgrave from Checkout.com with us today. Checkout.com is one of the global leaders in when it comes to payments. They've done a lot of work in crypto, and they are going to talk about how we can make this even more mainstream today. So please join me in welcoming Jess Houlgrave, and my friend Mauricio is back on stage with us. Okay.
Hey. Thank you,
sir.
Appreciate it. Hi, everyone. We're back. Hello.
Hey.
Hey.
Take that one.
Thank you. Good. Hi, everyone. So we're going to talk a little bit about how we can optimize the payment stack. Jess, welcome. Can you tell us a little bit about you and Checkout.com?
Sure. Thank you so much for having me. Checkout.com is a global payment services provider. We provide products like card acquiring, but also on the payout side, so the ability to pay to card and pay to bank. And we've been doing that for kind of Web 2 businesses now since 2012. In that space, we process for a whole range of people from e-commerce companies all the way through to fintechs. And for the crypto industry, we've been providing that exact kind of product set, the ability to accept fiat payments for crypto exchanges since 2018. Today, we kind of count many of the world's leading exchanges among our customer base, on and off ramps like Transact, Joe, who was just on the stage, marketplaces, NFT platforms, basically anybody who wants the ability to accept fiat payments as part of their tech stack.
And in terms of is there a typical profile between the traditional client on the fiat space and the crypto client? How do they differ? Is there any differences?
So I think one of the things that makes Checkout unique is that we are digital only. So we don't do any point of sale, the kinds of terminals that you see like in a shop. We're only online. And we deliberately have focused on that because we see this like very systemic shift to online payments. So in that way, kind of many of our customers share this similarity in that they're typically like very progressive, very tech forward. Often they have a global footprint of customers. And from a checkout perspective, we can provide payments in 170 plus currencies. We're kind of licensed everywhere from the US, Europe, UK, Singapore, Hong Kong, MENA. So we have this very global footprint, which means that we can help our merchants, whether they're e-commerce or crypto, to expand globally. So those are the kind of the similarities. In terms of how they differ, I think being a crypto company, you definitely have very specific payment needs. Part of that is the global nature. So you really, unlike an e-commerce store where you might just be selling into one country, you really need to be able to accept customers from as many places as possible. Mm-hmm. The other thing is that kind of from a crypto payments perspective, and without kind of going too boring on the payments stack, crypto payments have a lot more challenges in terms of fraud and acceptance rates than many merchants do. And acceptance rates is basically the probability of a single transaction going through and getting accepted. We've all been there online. Normally, I'm trying to buy a pair of shoes, and it's like payment declined. In crypto, the rate of that happening is a lot more because issuing banks aren't used to crypto payments. They're still trying to get comfortable with it. There's often a lot more fraud in the crypto space. So we work really, really closely, probably more closely with our crypto merchants than many of our other merchants, on making sure that they've got all the right risk and fraud settings, that they are kind of maximizing their acceptance rates. And then we do outreach to issuing banks to improve those rates. So our kind of customer success team, the team that looks after all our crypto customers, is like very kind of big proportionally on the crypto side because of that work that we do with our customers.
So there's, the natural, I'd say, challenges of adopting a new platform, but there's also a good chunk of education that has to go through all the value chain to actually enable some of that. So what are some of the other challenges that Checkout helps these merchants to actually overcome as they delve into the world of crypto payments?
So we have been We've been doing a couple of things. Number one, we've been exploring how crypto, from a technical perspective, can help those merchants. So as well as just serving our crypto industry with fiat payments, we've been starting to build products that actually utilize crypto payment rails. One of the big challenges with payments is that we can only operate within the kind of 9 to 5 banking rails that we're used to. So when we collect all the funds from Visa, MasterCard, all the different alternative payment methods, we basically aggregate those and then settle them to a merchant on a daily basis. We, earlier this year, released what we call our stablecoin settlement product, actually with Transact. They were one of our pilot customers. And what that means is that we take those funds that we receive from all the payment schemes, convert them into stablecoins, and then settle them via crypto rails, which kind of breaks this 9 to 5 barrier. We can settle them funds over weekends. We can settle them funds over bank holidays. And it's this kind of like incremental step forward to what I think is the payments utopia, which is where when a customer makes a transaction, those funds instantly are available to that merchant. So we're not there yet. We're still a long way off, but I think that there's these incremental improvements that we can make using crypto rails. The other big challenges, of course, are user experience. Big kind of challenges there in terms of payments. We are, especially in kind of countries like the UK or the US, where payment systems are incredibly easy from a user experience perspective. Like, I don't even leave my house with my wallet anymore because I can just tap my phone everywhere. Everything is so seamless and also very secure. And I have a great customer experience because I can make a charge back. If I have an issue with my credit card, I phone my company. Like, everything, because of just how established the payments industry is, everything is so easy. And we're right back at step 0 for that on the crypto side today.
Yeah, I think UX is a big unlock, if you will, to crypto acceptance. And I think companies like Checkout and others are actually trying to bridge that kind of gap and make it easier. Because it really doesn't matter for the user whether you're settling like immediately or if it takes a little bit longer, as long as they can get out of the store or get out of the website with the product that they want to buy. So that is kind of the end of things, right? But to your earlier point, this is a global 24/7 digital infrastructure. And because it's everywhere, not everywhere looks at it the same. So what are the nuances in jurisdiction that you've seen as you roll it out across the world and try to incorporate crypto into the offering? What are the, maybe like top 3 challenges you've seen, and how is Checkout.com actually going and tackling those?
So I think regulation is by far one of the topics that I spend most of my time on at Checkout. And we're super lucky. We've got an amazing regulatory team. But in the crypto space, things, as many of you will know, just move so quickly that you have to really stay on top of things. There's a few things specifically within that regulatory space that I think are important. One is crypto companies themselves. So we, as a payments processor for crypto companies, we are regulated, but we have to be able to prove also that our kind of customers are behaving in the right way in order that we can provide payments to them. So we're very, very focused on particularly the exchange regulation, where there's so much focus from a consumer protection perspective to make sure that our merchants are compliant from that perspective. The second is just this kind of like, where does the boundary sit in terms of regulation for payments? And I think the UK is a really good example where they've been very clear that stablecoins are something that's going to come in within the regulatory perimeter from a payments perspective in the near term. That's really helpful for us because it allows us to kind of plan accordingly, but not everywhere in the world is like that. And so because we are licensed in so many different countries, we spend a lot of time with our different regulators to understand how they think about crypto, stablecoins, even CBDCs within the regulatory landscape. Because as a payments provider, like, our mission is to help our merchants to accept value, right? Whether that is a credit card, a debit card, an alternative payment method, or a cryptocurrency, we want them to be able to provide choice to their customers because that's what helps them get customers and get revenue. And so working with regulators to just get them comfortable with the idea of crypto being used as a payment method, I think is really important. And then the final thing that I think is a really crucial building block to this, where Checkout, we kind of play at the edge today, but I think that there's so much scope for people building in this space, is in the identity space. You know, whether we say like crypto is regulated or not, like the reality is that it has to abide today by many regulations from an AML perspective, a KYC, KYB perspective. And so I think people focusing and building on that piece of the pie, I think there's great opportunity there.
Yeah, identity is one of, it should be a financial services primitive anyway, because you know, we need to know who we are, whether we're present physically or we're online, it really doesn't matter. So in terms of path to adoption, what is like the typical route from your experience, like having, say, traditional merchants and then moving towards something that's more crypto-oriented? What do merchants need to go through to actually get into the weeds of building something that they can actually use to, even if not being more efficient themselves, maybe attract more of the crypto audience towards their business? What's that path look like?
So I think that there's kind of like, I look at this as these 3 different building blocks when I'm speaking to our Web 2 merchants, right? One is this efficiency concept. How can you be more efficient as a business? And I think that there's a huge amount of scope for crypto rails to enhance the way that businesses work today. Anybody who's worked in a business that has more than one entity, that's moving money around the world between those entities, knows the complexity of that. And I think that supply chains, payments, things like that are going to be really crucial to that. The 2 then really interesting conversations that I'm having with Web 2 merchants are on this idea of crypto acceptance, like how do I accept crypto as a payment mechanism, and also crypto payouts. And I think that for me is one of the most exciting. So when you think about crypto payouts, what I'm talking about today is that we can offer the ability for our merchants to make push payments to card or to bank. So if you're on a crypto exchange, you no longer want to hold that crypto, you want to take that money back out to your card, we can provide that piece of the technology. And there's a 3rd missing pillar there, which is this idea of crypto payouts. And the customers that I'm speaking to at the moment on that are gig economy work sort of platforms, creator economy platforms, money remitters, where these payment routes today are super expensive, super slow, and really like very, very painful. So if you're say you're a creator, you live in an emerging market, you sell a piece of work for $100 on one of these platforms, today, to get those funds out, is going to be some horrible, complex, correspondent banking system that this goes through. And you don't really see that plumbing behind it, but what you do see is that of that $100, you only end up with like 85 in your bank, right? Because of the fees associated with it, and also the fact that it takes, you press that button today, on Monday, and it probably hits your bank on like Wednesday or Thursday of this week. So slow and expensive. And I think that here there is opportunity for crypto to make this huge leap forward, which is I can pay you in USDC, and I can do that at the click of a button in a currency that allows you to then make a last mile transaction in your home country to a currency of your choice, or even to then spend that kind of still in stablecoin form. And instead of $85, you're going to get 99.9% of that payment. So that's one of the kind of use cases that I'm super excited about. In terms of that pathway, super complex. And that's because the people making these decisions in these Web 2 companies are often very familiar from a personal perspective with crypto. Like every time I speak to a CFO, I'm like, do you hold crypto? And they're like, yeah, I have a Coinbase account, and I bought $100 of Bitcoin. Like, great. So they all kind of get it and understand this conceptually. But translating that into a boardroom of a listed company and going into your board and saying, hey, I've decided that we're going to hold Bitcoin on our balance sheet, or any kind of permutation of that conversation, has a very, very different reception internally. And so this is where I think payments companies like us, ourselves, but also infrastructure providers, many of the people that we partner with in the ecosystem have a huge role to play because they can kind of provide this like level of comfort and this idea that we're like getting ready for enterprise use of this, which is so different than me holding it personally, but me actually like building it into my business processes, having it reconcilable with my accounting systems, making sure that all my tax treatment is right. All this like very like boring but very complex stuff. So I think that's one of the biggest barriers, just in terms of getting people kind of comfortable with it.
Interesting. And one thing you just said, it kind of triggers to me one of the things that we still see, maybe not a backlash, but a resistance, is to understand this infrastructure as part of a enterprise-grade software, which is, I've been in the enterprise space for many years, and we keep talking about how stable it has to be, how secure it has to be, how reliable, and maybe part of the volatility we see in digital assets or native cryptocurrencies is also in the fact that, well, not everything that's being built right now in crypto is enterprise grade, and I would argue that most of DeFi isn't. I don't have the data to back it up, but from the exploits we see, from the headlines, there is still a lot of fragility in that kind of infrastructure perspective or technology perspective. In terms of the technology itself, what else do you see as a challenge that crypto as an industry needs to kind of step up the game to actually enable those boardroom conversations that are not scary anymore?
Yeah. So definitely like this idea of governance is really important. If ever you've kind of had a business bank account, you see how those interactions take place, you see the API integrations that are possible between banks and accounting platforms, everything kind of works. Often not quite seamlessly, but it works. It's reconcilable. Businesses are able to close their books. They're able to understand their flows very seamlessly. They're able to see which SKU was sold with which transaction. Like all of these things have kind of been developed over time. And even the way that as a business you log into those sorts of environments is done in a very like secure way. Today, I think we're getting there on that side, and people like Zero Hash or Fireblocks, some of these infrastructure providers are making great headway in terms of providing an experience that feels like an enterprise-grade governance experience. So I think that's one, but there's still a long way to go before it really kind of feels like and by the way, we may not even want to get to the stage that it feels like a banking experience, but we got to give people the comfort that it feels secure like a banking experience. So there's that. I think there's also this question of like payments is the number of transactions that go through payment rails, whether it's Visa, MasterCard, any other schemes, is huge. The replay systems, the chargebacks, disputes, fraud, like there's all of these layers built into every single payment flow. And the reality is that like even at the layer 1 protocol level today, there's not much out there that can compete with a Visa or MasterCard experience from a customer perspective. There's a lot of value proposition that's being built there. But in terms of like a latency, a throughput perspective, the customer experience is still a little way off. Now, I think we'll get there, and I'm super excited about the time that we do. And the reality is, from an adoption curve, we don't need it to be there just yet, but we do need to move away from these kind of like poor wallet experiences, these like hacks that are putting people off, the issues with bridging. Like there's a lot there that I think still puts a lot of fear in terms of these like Web 2 merchants.
Got it. Yeah. Well, every time I need to send crypto to someone, I usually send like very tiny amount to make sure that that goes through to the right wallet.
Yep.
And then, that's you, great. So then I'm sending you, the proper amount just for, to prevent any, me sending money to someone else, and that is irrecoverable.
Yep.
in that context. So that's also part of the whole UX and security and enterprise grade approach to things. So looking from now where we are and we're at merge, so what is the path now that you see in terms of the market more broadly in terms of actually becoming this sort of convergence between TradFi and crypto in the sense of optimizing the payment stack. What is it in terms of trends you're seeing forward that we might be able to see coming into effect in, say, 6, 12, 18 months from now?
So I'm kind of, when I was in crypto before I was at Checkout. So I've always been like very, very interested in this convergence of the two worlds. And I'm a big believer that these kind of two different rails, traditional payment rails and crypto rails, are going to exist side by side for a very, very long time. There'll be some people who might say that we're going to see this big pivot and everything's going to run on crypto. Like, maybe, but it probably won't even be in my lifetime. So I think that like these two worlds are going to have to exist very seamlessly for a very long time. I think that there's some really positive momentum in that regard. Number one is just with the kind of sentiment. So whether you're a banking provider or whether you're a card scheme like a Visa or a MasterCard or an alternative payment scheme, like today, which maybe you wouldn't have had 2 or 3 years ago, like you have whole teams of people who really understand this stuff in your company and you're trying to make it work. So not all banks are there yet, but we know that they're thinking about it. And we have conversations every single day to support our partners in terms of getting up that adoption curve so that they can provide services to the crypto industry or to support crypto-related products. And I think we'll continue to see that. I think from a consumer perspective in that regard, we'll also continue to see kind of the coming together of these two worlds. So perhaps by logging in via your kind of consumer banking portal, you might actually be able to also see a crypto wallet there. Now, there's a whole different conversation about decentralization and the kind of user experience, but I do think that we'll start to bring these from a consumer experience perspective, much, much closer together. And I think that's a positive step forward for individuals to make that first step and learn about crypto, which may then hopefully take them kind of deeper down that path. So I think that from a partnership perspective, from a user experience perspective, there's a lot of positive momentum. I also think, and one of the things I've been most pleasantly surprised about this year is that in the last kind of crypto winter, you had all these Web 2 merchants who were like, I'm going to accept crypto payments, I'm going to offer crypto products, who, as soon as the crypto winter came, they were like, okay, I'm out. I'm shelving that I'm shelving that project. I don't want to be putting this in front of my board. I'm out. This year, I've actually seen almost the opposite, which is people saying, hey, I kind of missed it last time. I have conviction that this trend is here to stay now. I deeply believe in not only the idea that people might want to use kind of decentralized cryptocurrencies to pay for things, but in this idea that crypto rails from a payments experience has huge efficiency potential for my business. And so I have the energy and the time now to start really building against that so that I don't miss the next wave and so that I can kind of really start to capture some of those particular benefits. So I think that is super exciting because it means that these businesses who we might not even be thinking about today, who are kind of Web3, are actually really starting to put the work in to bring some of those benefits to their consumer bases.
Yeah, interesting that if you haven't been exposed to the bear from the previous run, and you're entering crypto now to whatever you're doing, it's actually cheaper to build now than it was like 6, 12 months ago, because not only we had a bunch of progress from the latest bull run, but we also now have more developers everywhere. We have improvements in the layer 1s and in layer 2s. We're starting to see things that deal directly at a protocol level with privacy, which for banks and the traditional finance participants is so important. And we obviously know that there was, for a reason, that wasn't exactly how blockchains came to be. So I think in that scenario, I fully agree with you, is that we're seeing now a level of not only interest, but maturity in terms of the discussions, right? An event like this kind of prompts that, as Peter alluded at the beginning, this is a serious conversation. We're not shilling anything. We're just figuring out what's the best use of this set of technologies for what we want to do and the problems we're trying to solve as an industry. So that is a big step in the right direction. I fully agree. And in terms of checkout.com, I mean, what is the footprint? Where you're present, and how big crypto has been in the places where you're present at this stage?
So we're now about 1,500 people, I think, kind of globally. We have 22 offices around the world, and we provide payment services to merchants in the US, UK, across Europe, MENA, kind of Dubai, Saudi, Hong Kong, Australia, Singapore, probably a bunch of others that I haven't named. So we have a very, very global footprint. In terms of how crypto plays into that, it's mixed. And that's really because of a regulatory perspective and also where crypto companies are based. But it kind of tends to match that where it's available. So from a kind of global exchange perspective, we work with many of the big global exchanges. We also work with a lot more kind of localized platforms as well to provide them with kind of fiat capabilities. We are also then seeing this kind of like trend where some of those more local players want to be able to expand geographically, which is one of the kind of core competencies that we have in terms of helping them to do that. I think that's going to really continue, and especially as more and more regulators get kind of comfortable with this stuff, and we're seeing great cooperation also between different regulators who are quite rightly, like they're observing what their counterparts are doing in other places in the world, seeing how this plays out, because what they've realized, especially with crypto, probably more than any other kind of vertical that they regulate, like this is a competitive game for them. Like if you as a crypto company cannot work closely with your regulator and build your business in this geography, you're not going to just not build it. You're going to go somewhere else. And you're going to find a country that is going to support you in offering the products that you want to build. And so I think that this kind of, for some regulators, this realization has been a little slower. But definitely people are catching on, and they're making sure that they're ahead of that trend, that they're able to position themselves as I mean, here in the UK, like very crypto-friendly, but elsewhere, even if they're not positioning themselves as kind of crypto-friendly, a lot of them are positioning themselves as crypto-knowledgeable and willing to have those conversations with people, which I think is probably the most positive thing that's happening in this ecosystem.
That's not going to afford not having those conversations.
Yeah.
Great. So I just want to check if we have Slido questions for Jess. If any of you... we have a couple of minutes left, so I don't want to run over the clock. See if there's any questions on payment stacks. Very good? No? Okay. Any parting comments, Jess? I mean, in terms of,
No, look, I think that one of the, I'm going to call it the silver linings of this environment from a crypto perspective is that companies have the time to look at what they've built, make sure it's really working, look at their tech stack, look at their providers, their partners, to make sure that they're getting the most from their payments, right? Like every conversation with a crypto company today is like, how do I make sure that I'm maximizing my revenue, getting those acceptance rates up, and how do I make sure that I'm kind of lowering my cost? And so today is actually a really great opportunity to be looking at that as a business. Because, whenever it comes, and we don't know when it's going to come, but whenever that bull cycle does come again, as a business, you're just focused totally on that top line, like how do we get more customers? And so I think the silver lining of this environment is taking that time to speak with providers and with partners to make sure that they're building for you what you're going to need during your next phase of growth. So if anyone wants to talk about that from a payments perspective, let me know.
There you go. All right. We'll wrap it up and pass it on to Peter Rand for the next one. Appreciate it. Thank you.
Thanks. Thank you so much.